Hello there guys, Christian Evans here from Sanctuary. We're going to have a quick little look today on this kind of flash crash business that's happened yesterday in the cable. As you might have been aware, the market moved approximately 600 pips in the space of 2 or 3 minutes. Now, that's kind of an unprecedented move. How it was caused, people think it's due to a fat finger error by an institutional trader. Now, I'm sure we've all been there in the situations where we have kind of accidentally put an extra zero on our trade sizing, those sort of little errors which can kind of mean that you increase your exposure limit there. That kind of won't make much difference on a market level if we do that individually. However, these institutional traders are creating massive order flow into the markets. Now, during normal trading sessions, the 8 till half 4, those when it's most liquid in terms of the majority of players being in the market, the majority of volume, you would expect a trade size of this size to actually still move the market based upon the constant selling that's going to be taking place, hitting those bids, so to speak, or kind of scaring off if it's a large offer in the market such as that. But it's kind of not going to move the market as largely as it did. The reason why it did was because it was in the overnight session, and it was mainly only the Australian and New Zealand markets and some of the Asian markets that were kind of still trading actively. Now, people tend to think, around the clock there's different areas of the world that are fully trading. Yes, but in terms of a Great British Pound and US dollar pair, the Australian and New Zealand traders, they're still going to be looking at the cable, but they're not really going to be trading as much as their own kind of basket of currencies there as well. So you'd expect it to be a lot thinner in the market and a lot less liquid. And on an institutional level, where these large orders coming in, they're going to really disrupt the market. There's going to be a lot of slippage for different traders just because of the kind of way in which that order hits the market. It's going to be quite aggressive, and it's just going to bang, 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 bang. And on the back of that, then you're also going to have a lot of people who are either going to be stopped out of a position, because the size of it here is going to trigger a lot of stops on those shorter term traders, and it's also going to pick up as a signal for those algo traders who are going to kind of jump in on the back of this move. I don't really think that going forward there's going to be any blame apportioned. There's kind of, it just so happened that the market was thin just because a large order went to the market. It's not, there's no market abuse taking place or anything like that. It's literally just an error that the company, whoever the trader was, has to kind of deal with and absorb. And as you can see here, we had this selling pressure, and the market soon after actually did rise. Now, this is a daily candle. If we go down a bit further, you can actually see that on a very short time frame that, I think the hourly would be better. Or even the hourly. If we go on the 15 minutes there, we can kind of see, we should be able to see, that the market kind of did its selling off, but kind of still aggressively moved to the upside. So you can see here this aggressive move to the downside in one candle. It still doesn't close at the lows, and then we still get this buying pressure up. Now, what do I think of that? I think it's basically the order has been triggered to the market. You've got this massive selling pressure. You've then got the algos getting in and out, in and out, in and out. Stops are being kind of triggered on those who are kind of long and maybe shorter term traders who, the stops aren't wide enough. They're not going to have over a 600 pip stop, so to speak. So it kind of triggers all these stops. There's a mad panic of people trying to sell, which forces it further downwards, and then fresh buying comes up, pushing it up. But I also think then that's kind of perhaps the person who kind of triggered initially. Once the selling started inflowing, they're trying to reduce their exposure and kind of flatten their position a little bit. So I think some of this would be, where do I think the trader is now in terms of position size? I think the trader's kind of at at their normal trading limits in terms of the selling's taken place. They've then tried and flatten their position. They might have made a bit of money, might have scratched it, they might even lost. Well, I don't think they've lost, but depending on how the slippage went in terms of when their order hit the market, they might have even lost a bit of money as well if they were still selling down in this region perhaps and then getting out up here. But that's the kind of the risk with financial markets and fat fingers. A couple of guys that I'm familiar with run EAs, so algorithmic systems that try to profit off these opportunities, and so far I haven't found one that kind of made money on this day, and a lot of them have actually gone into quite a significant drawdown despite having an almost perfectly linear sort of kind of equity curve where it's kind of just ticking over, making consistent returns for 2-3 years before, and then this day kind of really did ruin them based on the slippage and the decisions that algo was taking. The important thing to note though is when you've got this buying coming up here, people know there's a fat finger, but the market has not pushed back up to the previous high of this candle. So it's based on the fact that we're already in a very bearish market here. The market's pushed down this level. It's almost given a signal. So we're looking for this retracement. The market's come back up to this level here, and it's ebbed and flowed. So showing that the market is not ready to kind of fully compensate with a move directly back up to the highs here. If we had, say, a dragonfly doji, you can kind of almost, I wouldn't say ignore it, but you can kind of tell that an extreme event occurred, but that's kind of not really happened. It's kind of given people fresh shorts to come in here, and that's kind of been an additional signal based on the size of the candle that the market wants to go short, even though it was a single trade that kind of caused this mad flash crash. Basically, the thing to note is, if you're gonna hold in trades overnight, especially over the weekend, anything like that, you need to be able to have stops. Now, your stops don't necessarily have to be stops to get out of the market. If you think that the market could behave irrationally over the short term, but you could have stops to hedge or just hedge over the weekend anyway, just in case you have any sort of extenuating circumstances that either happen overnight, over the weekend, anything like that, when you're not going to be at your desk and familiar. Personally, I think a lot of accounts have either been made or blown based on this move. I think a lot of traders, especially in the UK and the US, they're going to be waking up, looking at their positions and thinking, oh wow, this might have been a life-changing sort of event. But if you go on the higher time frame, you can kind of see that it's been all the talk that the market has been in a distinct downtrend following Brexit. So the market's just going lower and lower and lower. So I would not be wanting to go long anyway. So anyone that's kind of long these levels before this market, they kind of a little bit like fodder, really. I mean, if you're looking for a retest of this level here, a support turned resistance on this breakout, then look for it to retrace and go short. I would not be looking to buy at all in any circumstance. I can understand intradaily that you might find a little opportunity based on a specific technical pattern to go long, but that's very different to holding a position overnight on a swing basis where you know the market is likely to sell off and you're still going long. And that's completely different to an intraday opportunity. So I think, if I'm honest, the vast majority of people who are professional are going to be short up these levels anyway, or even upon the breaks there, if they've got in on the basis that it's breaking into new lows, they've shorted it with a stop entry opportunity on this little pullback within this kind of ebb and flow. So the professionals have probably made money off this opportunity if they had a profit target down here, or even if they're still holding. But I think a lot of amateurs that have kind of thinking, the market's gone too far, picking bottoms, etc., have probably blown a lot of accounts here. I don't know of many, or if any, professional traders who are looking to long the cable at the moment. It's just the idea of having a hard Brexit, all of these kind of ongoing issues regarding Fed rate hikes, all these kind of in the topic news. I would not be looking to go along the cable. So it's kind of, I want to say, I'm not going to say they got what they deserve, because that's not the case at all. But I think it's kind of a warning signal. If you're going to go against the trend, this is the sort of kind of opportunity and kind of loss that you might experience. So do I think now that where do I think the market's going to go now? Now, to be honest with you, you can kind of see we've got this large area of price rejection, and the fact that even with this 600 pip drop, it respected the 120 handle, which is a very significant level based on the round number. Obviously, all these levels are going to have some form of significance to them, but the fact that it's in the tens or the fives and the tens is going to be of greater significance. Basically, how I think the market's going to go on the morning. I know usually I say that if we've got a large level of price rejection, I'd look for the market to come down to go long, but I think even though as a technical trader that's what I normally do, I think because of the size of this move here and the ongoing news that is kind of talked about with regards to the cable and almost the demise of the Great British Pound, that there is no way that I would be looking to go long here. Unless, as I said, there was an intraday opportunity where the market looked like it was struggling around this level, around the 120, and then you can kind of have a couple of 100 pip move or whatever up to the upside. But as we go, it's not something that I'd be looking to go long. And so I can imagine a lot of trend traders are just still looking to hold their positions. There's nothing really else to talk about. But we've kind of spoken already about a lot of algos that kind of got involved here. As I said, there's a couple that I know that have perfectly linear, nice upward sloping equity curves, and all of a sudden you've had this massive drop with sharp increase, and I can imagine a lot of investors either looking for answers or rushing to the exits. And it's a shame, really. I mean, if you've had 2-3 years of solid performance, and then you have this which kind of erodes all of the impact and all of the profits that you've made, it's a bit of a shame. But the important thing to note is that EAs only work under certain circumstances, and even though people profess to be able to find these opportunities that relate to small, minute market moves, a lot of the algos that you might be able to create on MetaTrader or anything like that, they're going to be based on indicator crossovers, they're going to be based on price action and all these sorts of things that a trader would be doing at their screen. But I think creating an algorithm with that in mind is very, very different in terms of how it's going to perform compared to the black pool, so to speak. How if you've read Flash Boys by Michael Lewis, so how it all happens on how a second can be extrapolated into almost a lifetime of trading. That's very different compared to making trading decisions based on a computer that does it based on things that any trader can look at, and it's very much it removes the emotion of it. But then, is the system actually that great in terms of how it can adapt going forward? Because you might do very well in a EA with some form of oscillators when the market's ranging, but then it can consistently lose money as soon as the market trends, whereas a human will be able to pick that up far more quickly, whereas an EA will never. It'll just constantly be looking for those opportunities for the market to retrend and continue to lose money until then. So EAs are one of those situations where you need to really focus and think about who you're going to invest in. I'm not a big avid fan of EAs. I was thinking of starting one before I had an opportunity with a London firm who asked me to go meet them about creating my own, and I think it seemed very amateurish in terms of how they were doing it. And there's professionals out there that make millions upon millions off EAs, but I think the structure and the framework and infrastructure behind it goes far beyond technical analysis, trading decisions and emotional state, all that. I think it's all about then the dark pools, what's happening behind, on a very, very minute second basis, and you need to be quicker than the high street brokers that you're familiar with. And it's just kind of a tough lesson for those investors in EAs where if you've got these perfect equity curves, it looks great on paper, but sometimes there's a behind the scenes view on why that you're making those consistent returns as perfectly as kind of seen, and what market conditions are allowing them to actually make those returns, and if those conditions can change, how's the EA going to adapt? It's kind of one of those things that as an investor you need to think about and really come to grips with prior to putting your money on the line, or play your cards very close to your chest in terms of only putting a small amount of capital into them. Okay, guys, so that's basically just a quick chat about what happened, the kind of the flash crash of the 7th of October 2016, and I can imagine this day will go down in history. So thank you very much, guys, and take care. Have a nice weekend. Bye-bye.